and welcome back to the podcast. Thank you very much for being here. Hey, before we get started, I just want to let you know that I will be in Cedar Rapids July 20th, which is this coming Thursday, if you are listening on Friday as this comes out. I will be there July 20th doing a client-only think tank at 4 p.m. and a non-client, just a public Life Without the Bank, Farming Without the Bank little seminar. It is going to be awesome because we are going to talk about everything IBC. We'll talk about inflation. We're going to talk about banks. We're going to talk about maybe the cryptocurrency, history of the dollar, fraction. We're going to talk about everything. Anything and everything that you want to talk about, we're going to talk about it. And so go to withoutthebank.com. And then you can click on events and you can get your ticket there. Or I think it is withoutthebank.com/events, whatever, go to withoutthebank.com. And then if you click on events, you can buy, if you're a client, buy a client only ticket. If you're a non-client, then you can come to the evening seminar. Okay, let's get into it. Today, I want to talk to you about your credit score. Now, I am going to preface this with, I am not a credit score junkie. In fact, I don't look at mine unless I want to buy something. And then it's a big surprise to me what it even is because I don't watch it. I don't have to watch it anymore. That was one of the biggest reasons for me to get out of the banking system was I could borrow money from myself and it can be transferred and nobody asks what my credit score is. And I've never had a bad credit score because I pay my bills. However, it annoys me that banks look at your credit score. But I bought a vehicle one time and they ran my credit through 6 different lenders just to still go with one of the highest damn lenders that they got because they got their biggest kickback from them. But they ran it 6 different times. What do you think that did to my credit? It tanked my credit score. And now then we come in to refinance our home and they're like, oh, your credit score is not that good. Why has it been run so much lately? Well, I don't know. I bought a car that should have been run 1, maybe 2 times, not 6 times. They didn't tell me that. And so it was super annoying to me. And thankfully, the bank that I use does not base everything off of credit score. They base off of payment history. So if you have a really good payment history, they overlook your credit score. Not that I don't think mine's ever been below 700. I'm sure in mid 700s is usually where I'm at. But it really is, to me, annoying. I get why people do it, but there's ways to manipulate that. There's ways that I have learned that the credit companies do their things. And so I just want to share a few of those with you today because frankly, I don't have an expert to bring on. If I had an expert to bring on that was truly an expert, I would do that. But I'm just going to give you information that I have heard either online, I've read online, or I've heard from actual clients. And life insurance companies do look at your credit score when you do the application. They want to make sure that you have a good credit score. And so here are some of the things that I have learned that if you don't have a credit score, if you have bad credit, or if you want to maintain your credit, this is all good information. So first of all, to raise your credit score. So let's say that you have a bad credit score. To raise your credit score, you are going to want to pay based on your due date or your statement date. Now, it depends who you listen to on what matters. Some people say based off of your statement date. Most people will say based off of your due date. And so let's say that your bill is due on the 30th of every month. You are going to want to pay half of your bill on the 15th and the other half before your due date, like 2 or 3 days before your due date. And apparently, if you pay half of it 15 days early and half of it by the due date, they report differently, or they report that you've made more payments or something. It will raise your credit score significantly. And so if you are wanting to get that credit score up faster, then be diligent about making those payments. And you can watch if it is the statement date or the due date. I'm just giving you the information that I have read, but making those 2 payments 15 days apart That's uniform. Everybody says on the 15th and then the due date, but someone said 15 days before the statement date. So you do what you wish there. Also, I was told this many, many years ago by a mortgage lender that you should not be maxing out your credit cards. And so, whatever your credit card limit is, you should really be 30% or less on that credit card. And so, having 10 credit cards with 30% or less on them is way better for your credit score than having one card maxed out. So, a lot of people think, oh, I have all these cards, that's bad. But when in fact, having a lot of cards with a little amount on it is just fine. It's having one card with a lot on it is not good. Now, I have seen too where you can go in and get a loan, or when you go in to get a loan, they're like, oh, you have too much available, so we can't give you a loan. But I don't have it used. Yeah, but it's available. So you could use it and you can max it out. So now your income to debt ratio is too high, but it's not maxed out. And I'm behind to max it out, right? I don't know how that piece of it works. I would love to find that out, but I have heard that before. Somebody got denied because their available credit line was too high compared to their income. Now, if you have a credit card, if you have a student loan, if you have a mortgage, if whatever you have, the longer you have that note, the better. And I found this interesting because it shows that you have a long history. So I have had one of my credit cards I've had for probably 20 years or better. If I canceled that card, it would actually hurt my credit because now I have a 20-year history for them to look at, but I also got a new credit card a couple of months ago. So they're going to go, oh, look, she got rid of the 20 years. So now we don't have 20 years to look at. We just have 4 or 5 months to look at. And so that is going to hurt the credit because you don't have that big, long look. That's actually been hurting some people that are paying off their student loans early. I would imagine it's going to be the same thing if you pay your mortgage off early. And so that was interesting to me. Do not be paying off debts early. It's got to make sense. And don't be getting rid of old credit cards and closing those old accounts. Keep them, even if you're not using them, keep them because it is showing some credit history. Let's see, what else do I have here? If you have a lot of credit card debt. So I don't see this a lot because most people with credit card, lots and lots of credit card debt do not even read my book, right? They're either going to Dave Ramsey or they just keep on spending. They are not paying attention to their finances. But I do see it when somebody has a lot of credit card debt and they are done and they are ready to focus on finances and they want it all to make sense. And so if you have a massive amount of credit card debt and you cannot pay it, I have had a number of clients tell me that you can call the credit card companies. Yes, you call them and say, hey, can you lower my interest rate? And they may do it. Can you write off some of this debt? Because I am trying to avoid bankruptcy and I don't want to file bankruptcy. Something happened, I lost my job, whatever it may be that happened that caused you to not be able to make those payments. And if you don't get somebody to make those changes right away, then you keep calling back until you do. So I had some potential new clients a few months ago, and they had a lot of credit card debt at one point, and they paid somebody to teach them this. I also had a potential client a few years ago that really, really, truly was going to have to end up filing bankruptcy because she lived in California. They shut down the industry she was in. There was a lot of debt. So not her fault. And much like COVID, right? COVID was not necessarily everybody's fault. It wasn't anybody's fault. And businesses went under. And so if we filed bankruptcy because our business got shut down because we couldn't have anybody in the business, then our choice is to file bankruptcy or ask the credit card companies to write that off. While I'm on this subject, if you are married and you have your spouse's name on your credit card and one of you pass away, the other one is going to be liable for that debt. If you are married and you own the credit card yourself and you pass away, your spouse is not liable to pay that debt. The credit card company will try to tell you that is the case, and it is not the case. I have seen this 2 or 3 times now where a husband will pass away, but the wife was never on that credit card. And so now they are not liable for that debt. And the credit card company has to wipe that debt out. I actually have a widow that an attorney told her about that. No, you don't have to pay your husband's credit card debt because it was his business expenses on there. And she was not a user. It wasn't her on the credit card. So know that as well when we're talking about credit cards. But you can go back to what I was talking about. You can call the credit card company, try to get them to reduce it. I think this lady got them to reduce it by 30%. You can have them reduce the interest rate, and they will do that for a short time. Because frankly, if you have a lot of credit card debt, why not just transfer it to a 0% card for 18 to 24 months? Right now, there's a lot of 0% transfer cards. So they either reduce it or they're going to lose out on any of the interest they're making. And I would, of course, tell them that. And then when we're talking about credit scores, if you have kids, 18, 19, 20, 23, 25-year-olds have terrible credit because they don't have car loans typically. They don't have credit cards. They don't have student loans yet. And so if you have a credit card, you can add them as an authorized user. I don't know if you can do it under 18. You used to be able to. Somebody told me you can. Somebody told me you can't. It's probably determined by the company. But if you add them as an authorized user, then you paying that credit card will also build their credit. And so they have a credit score now that they maybe can go get a better loan rate, a better home rate. They can get a credit card where before they've never been able to even get a credit card without having a pre-authorized card. I think it's called a pre-authorized card where you basically load your money onto it and then you use it and then you pay it back. And so those cards are nice because they start to build credit, but nonetheless, you are the one that has to put the money in to begin with. So if your kid can build their credit off of your card, like I just added my daughter to mine and I'm not telling her. I mean, she's not a money spender anyway. So it's not like she'd go ring up a bunch of debt. She wouldn't probably buy anything, but I'm not telling her that I did it. Because then she's going to be like, oh, look, where's my card? Well, you don't need one, right? Because you have a debit card. And now her debit card is actually a credit card. And so I'd be curious to know if it's being reported. I would imagine that her credit is, or her stuff is all being reported because it is through a credit card company, not just a debit card through the bank. All right. So I'm hoping that if anybody out there has has a bad credit score, that gave you some ideas of how to obviously get that thing raised faster. It really is not that hard. A lot of people say, oh my gosh, filing bankruptcy is going to destroy my life. Filing bankruptcy is a pain in the butt, and it definitely does not help anything for 7 years or 10 years. But building your credit score back up is not that super hard to do, and it can be done fairly quickly. So don't get too down in the dumps about it. Just learn how to manipulate the system because basically, like any system, it can be manipulated. All right, you guys, I hope that helped somebody. If you need anything, let me know. Email me, maryjo@withoutthebank.com. If you have subject topics, let me know. Email me. Otherwise, I hope to see you in Iowa or catch you next week on the podcast. Have a good rest of your day.